Hello everyone, welcome back to another episode. I'm your host, the Millennial Investor, and today we're going over a video topic that was recommended to me by one of my subscribers in the comment section. Great video. You should make a video about how the presidential election will affect the stock market, if it will crash, if Biden wins, or if it tends to go up. Same with Trump. It would be super interesting. It would give us an idea of what to expect. Well, thank you very much, Castro, for recommending this video topic. So I'll be making this whole video giving my opinion as to whether or not if Biden wins, if Trump wins, how it will be affecting the stock market, or really just any presidential election in general. But we'll be going over more than that. We'll be going over the CNBC article, which will go over the information about the election. I'll also be showing you 3 different charts showing the performance of the stock market traditionally from past presidents, both Republican and Democrat. There's 3 different charts here. Once we get through all 3 of those, we'll also be getting to some information about the Fed extending bank stock buybacks ban until the end of the year. Starbucks is also raising its dividend, one of my holdings, a pretty massive dividend raise considering all of what's going on. That is a pretty substantial dividend raise. And then next up, we are also going to mention, you know how the other day I mentioned how Coca-Cola is now coming out with a hard seltzer, one of its first alcoholic beverages to come out with in decades? Well, now they're also coming out with something else. They're also coming out with Coca-Cola with coffee, the company's latest bet against sluggish sales. So I think both of these products are really going to ramp up sales. And by the way, just a little side note, I really like the branding of these Coca-Cola with coffee products. But regardless, as usual, if you're not familiar with me, before we dive into all that different news articles, my name is Jordan. I'm the Millennial Investor. If you're not familiar with me, I track my annual dividend income, my monthly dividend income, my portfolio value, and my monthly YouTube income through all 4 of these charts. And here's all 27 stocks. Here's their tickers and the amount of dollar amounts that they pay me annually on an annual basis. And that was the previous month. And then these are all 4 of my charts. And there's my monthly YouTube income broke down by category right there. But if you're new to the channel and you want to support me, one of the ways that you can do that is that you can go ahead and click this little link right here that is in the description. We now have 44 people signed up. So if you use this link and sign up and deposit $100 to M1 Finance, you can get $10 just for signing up. So this is absolutely free to use. The brokerage has no fees whatsoever, but M1 Finance is a great platform and I'd recommend looking into it. And also, if you want to see the 27 stocks that I own, this link is also in the description. But if you want to see it right here, you can pause the video. These are the 27 stocks that I own in order from greatest weighting to smallest weighting. So there you go. There's all 27 stocks that I own. But let's go ahead and get into the video. Go ahead and check out the description. Thank you very much. Now this article, Trump versus Biden, how the election outcome may influence your stock investments. Recent stock market highs and lows have investors already bracing themselves for one more looming uncertainty, the presidential election. If you're like most investors, you're already anticipating that the outcome of this year's race for the White House will have an impact on your money. The vast majority of investors, 93%, I'm going to read that again. The vast majority of investors, 93%, believe that the presidential race will affect the stock market, according to a recent survey from Hartford Funds, an asset manager. Moreover, 84% said that they expect that this will impact their investing habits. Now, first off, this is the main paragraph that I wanted to focus on here. 93% believe that it is going to affect the stock market in some way or another. And then 84% believe that they will be changing their investing habits or their strategies based off of who gets elected. Now, before we go any further, I want to show you those 3 charts that I was talking to you about. Now, let's go ahead and start with this one. This is the last couple of years, the last couple of presidents that we've had, and let's just look at the stock market performances of these last couple of presidents. Now, this goes back to January 1st of 1979 all the way to recently in July of 2020. Now, with Reagan, we had a 14.1% run-up over the course of his term. Next, we had Bush, which he had a 15.1% run-up over the course of his term. Next, we had Clinton, which was a 16.7% run-up, and the only negative one on here was W. Bush at negative 3.2%. After that, we had a 16.5% run-up when Obama was in office, and then now we have Donald Trump, and so far he has roughly a 13.7% run-up since he has been in office. Now, if you want to notice something here, with the exception of W. Bush, and that was mostly because he happened to leave office at the bottom of the stock market. That's when he left, and that's when the Great Recession was just taking place in the stock market and everything was crashing to rock bottom prices. So go ahead, forget about this one for a second, and look at all these other 5 names. Look at Reagan, Bush, Clinton, Obama, Trump. Do you notice something here? Nearly all these numbers are identical to each other. 13, 16, 16, 15, 14. They're all very close to one another and not a huge difference. But let's go ahead and look to a further chart that's a lot further out. Let's go ahead and go all the way back to 1926. And let's look at how the stock market has performed compared to other presidents, both Democrat and Republican. Now, obviously, the red is the Republican and the blue is the Democrat, as you can see from this chart. But this is the growth of a dollar invested in just the basic S&P 500 going back all the way to 1926. So that counts the Great Depression. So you can see going all the way back here when Coolidge was elected president way back when, we had a huge run-up, then we had the Great Depression. But ever since then, look, nearly every single president we've had, actually I believe every single one that we've had except for Bush since then, has always ended up in the green. Look at Roosevelt, went up. Truman, went up. Eisenhower, went up. Kennedy, went up. Johnson, went up. Nixon, went up. Ford, went up. Carter, Reagan, Bush, Clinton, Bush, Obama, Trump, they all went up pretty much throughout the course of their term over the 4 or 8 years that they served, and nearly every single time the stock market continued to roar higher and higher. So if you're investing that $1 in the S&P 500, back when this president was first elected back in 1926, you would now have over $10,000 for the dollar you invested. So think about that. If you're investing $100, you would now have over $1 million just in the S&P. Now, through any of one of these elections, if you were to sell out, let's say you didn't like Eisenhower, let's say you didn't like this Republican president back then, let's say you said, oh, I don't like this Republican president, I'm selling out. Well, you missed out on 4 years worth of gains. Same thing with these. If you didn't like Kennedy or Johnson, any of these Democratic presidents, guess what? You missed out on lots and lots of gains. So in my opinion, just generally speaking, investing based off of who's getting elected president shouldn't really prove a whole lot of merit as to whether or not the stock market's going to go up. Regardless of what these presidents do, the stock market is generally going to go up as businesses become more profitable, as they buy out other smaller businesses, as they expand into new products, increase margins, hire more employees, and all different types of stuff. And as the GDP and population grows, they're always going to pretty much make money in the long run. Now let's go to the third and last chart here. This is really interesting because you have different categories of presidents between Democrats and Republicans. Republican president, Republican sweep, all elections, Democratic president, Democrat divided, Democrat sweep, and Republican divided. Now, the first thing I want to point out here about these numbers, once again, you notice through all these different divided and sweeps and Democratic and Republican president, and then just all elections in general, they all have really similar performances. From 38 to 49% range, it's not a very big deviation between these numbers, but you can see the charts here. Notice how at the end point they all achieve pretty much similar performance. So trying to choose which one's going to perform better, or thinking, oh my gosh, if Trump gets reelected, he's going to ruin everything, the stock market's going to crash. Or if you're thinking, oh my gosh, Biden has all these different things that he's wanting to change in the stock market, and it's going to crash the stock market. I don't really believe that either way, regardless as to which one wins the election. So I wouldn't really be basing any investment decisions based off of that. And a prime example of this is, like I said, I wanted to mention Starbucks raising its dividend. So Starbucks is a company that has struggled a lot from this recession. They've had a lot of their stores shut down, and they haven't been able to sell coffee the way that they normally do. Now, their share price has been hit quite significantly. This was basically a $100 stock at the end of 2019, the middle of 2019. And then at one point during this recession, this went all the way down to about $55, $56. So basically, this recession cut this share price in half all the way back from its previous all-time highs. Now, this had a 41-cent dividend, and it just got raised all the way up to 45, which is nearly a 10% raise. Now, during this 5-year chart here, pretty much throughout all of it, Trump has been in office while it has been growing throughout this economic period. But let's say that Biden gets elected in the presidential election that's coming up. Well, guess what? Does that change anything for Starbucks? If Biden changes different things with interest rates or monetary policy or influences certain political parties to change spending in the government, it doesn't really matter, because at the end of the day, Starbucks is either going to promote their coffee and have people spend money on their coffee, or they're not. It doesn't really matter who's in office. Another perfect example, we're going to mention Coca-Cola in this. Do you think it really matters who's president for Coca-Cola? This company has been around forever, since 1886. So many presidents have come and gone throughout this company, and it's never really affected the company in a negative way whatsoever. If Trump gets reelected, if Biden gets reelected, is that really going to change your influence to buy a $1.50 Coca-Cola from 7-Eleven? I highly doubt it. If you're at a restaurant, I doubt you're going to say, oh, that sucks. I really wanted a Coca-Cola, but Biden got elected and now it costs 10 cents more, so I'm probably not going to buy it. So just in case one of these nominees were to impose some kind of really hefty tax to change the business model of these companies, I think that they'll be able to adapt pretty easily. And if you go to my portfolio here, like I said, I own 27 stocks, and it pretty much goes with all of these companies. Most of them are very US based, don't have a lot of foreign exposure to them. So pretty much as long as the USA is thriving, they're doing okay, their businesses are doing just fine, then I don't really think it's going to affect too much who is the president. You see, I have all different categories from technology, I have real estate, I have utilities, I have fintech companies, I have industrial companies, banking and financials, I have healthcare, consumer, industrial. I have so many different categories in all different sectors, and pretty much all of these companies, you can look at them and say, wow, it doesn't really matter what president gets elected. These companies are going to do just fine and raise their dividends, and stock prices are going to go up pretty much every single year, every year that we're not in the middle of a crash. But overall, guys, that's my opinion when we're looking at these presidential elections. I don't think you should really be basing investment decisions off of them. I think if you're investing in an ETF like SPY or VOO, I think you should just basically buy this, set it and forget it, and regardless, reinvest your dividends. They're going to go up every single year, and no matter who gets elected president, I don't care what side you're on, it's going to do fine in the long run. But let's go ahead and get into some news here. Fed extends bank stock buyback ban until the end of the year. The buyback ban for banks with more than $100 billion in assets had been slated to expire today at the end of the third quarter. Now let's go ahead and pull up JP Morgan, the only financials company that I own other than Discover Financial. This is by far the biggest bank in the world, and let's see how they performed. Now let's go back to this article. But the Fed announced minutes ago that it will be extended for one more quarter. Additionally, dividends will continue to be capped and tied to a formula based on recent income. Capital positions at the large banks have remained strong, says the Fed, but economic uncertainty surrounding the pandemic response remains. The central bank is planning another round of stress tests in quarter four, which results to come before the end of the year. And if we scroll down here to one of the bottom bullet points, among the names to notice of this is Goldman Sachs, Bank of America, JP Morgan, the one that I'm looking at, and even a company that I used to own, Wells Fargo. So all these big banks are definitely manipulated by the Fed and how they handle interest rates and also stock buybacks and dividend policies. Now, the only thing I really care about is dividends. So I don't really care so much about stock buybacks and how this will affect JP Morgan, but I do think that this is actually in some way some good news. Now, the good news is that their CEO of JP Morgan is extremely conservative. His name is James Dimon, and he is very conservative in general, not just with 2020, not just with the recession, but just generally speaking, he always likes to have a lot of cash reserves, and they did not get hit nearly as hard as a lot of the other big banks, like Bank of America did, in the 2008 financial crisis. I think that this company is well stacked up for pretty much any type of recession that could throw its way. And the way that the Fed has things now restricted from now compared to where it was in 2008, pretty much any issues that could come up with the Rona or really just any recession in general, this stock should be just fine. Now, regardless, let's look at this stock and its dividend. This stock has had its dividend held all the way back from 90 cents when it raised that back in October of 2019. So we're now over a year now with no dividend raised, and that is probably not going to be raised until probably the following year in 2021. Now, the reason why I think this is almost a good thing, one thing that JP Morgan has been doing, just like all big banks, is they've been setting billions and billions of dollars aside for cash reserves in case the recession gets much worse. Now, here's why that's good news. I don't think that this recession is going to be hit nearly as hard for the big banks as a lot of people think that it is. Between loan forgiveness and forbearance and stimulus programs, not only stimulus checks being sent straight out to citizens, but also stimulus checks in the form of approved loans and loan forgiveness for a lot of small businesses, I don't think that JP Morgan is going to get hit nearly as hard as a lot of these other companies. But whether or not as to whether I'm right, let's think of the two outcomes. So let's take the two scenarios. Let's say that it's much worse than I expect, and let's say it's much better than I expect. If it's much better than I expect, like I think that it will be, then they have billions of dollars on the side. They have no dividends, they have no buybacks that are being ramped up, and they have billions of dollars on the side to offset any losses. So if that's the case, they probably still maintain this dividend of almost 4%. And then when the recession finally ends, what's going to happen? The economy starts growing again, and what they're going to do is that they're going to return all those billions of dollars worth of cash reserves to shareholders. They're going to have massive buybacks and dividend raises once 2021, 2022 starts to ramp up, and I think that this is a great buying opportunity still for JP Morgan, and this is definitely a reason why I bumped it up so much in my portfolio to now one of my largest holdings, and that's what these big jump ups are for right here. But overall, guys, I think that these big banks are a big buying opportunity, especially for JP Morgan and Bank of America. That's why I'm betting big on JP Morgan, and I think they'll be just fine. Now, another company, like I said, Starbucks, did just raise its dividend. I really thought that this company was going to be struggling for raising its dividend this year because they've had a lot of store closures. The growth in China has slowed a lot, obviously, with the shutdown. But Starbucks managed to raise its dividend almost 10%. Now, the really good part about that is that it probably will slow its growth because they won't have as much cash on hand. But as a dividend investor, that's someone that's chasing yield as well as some potential growth, this is going to keep its yield probably above 2% for quite a while. This number right here, 1.8, has not reflected that new dividend raise yet, but right now it is trading at over a 2% dividend yield with still pretty substantial growth behind their stores of coffee. And like I said, I'm very bullish on Starbucks. I recently made an entire video dedicated to it, so if you're interested in that, go ahead and check it out. And last but not least, let's go ahead and get into Coca-Cola, one of my last companies that I'm going to mention in this video. I did just recently mention that Coca-Cola and Molson Coors partner up for a United States launch of Topo Chico. It's a hard seltzer. Now, the hard seltzer category is exploding in popularity over the last couple of years, especially within the last 2 or 3 years. Now, hard seltzers now make up 10% of all beer sales in the United States, and that number is expected to grow. Now, there are some areas and some markets where hard seltzer is selling just as much, if not more, as traditional beer sales. I think that this category is eventually going to get just as big, if not bigger, than potential beer sales. Now, regardless of whether or not I'm right now, this gives Coca-Cola an opportunity to get into this market where they don't have any footholding. Now, Coca-Cola traditionally does not have alcoholic products. They have not had an alcoholic product since 1983. This is a long time since they've had any kind of alcoholic beverage. But with Coca-Cola's share price and dividend struggling recently, they've had a lot of issues trying to grow revenues. And I think that this is a perfect way for them to branch out. But regardless, I mentioned this in a previous video, but even if you don't believe in the hard seltzer, one other category that they're getting into, which is hand in hand with Starbucks, Starbucks is growing like crazy with its coffee, so why should Coca-Cola not piggyback off that success and then make its own coffee product? Which once again, like I said, I really like the branding of this. I think that these are going to sell well. Now, Coca-Cola with coffee, I've not been able to try this yet. They are about to come out into the United States markets. But if you find yourself flipping from Coca-Cola soft drinks to brewed coffee as your caffeine fixes, good news, in a few months, you may not have to choose. The world's largest beverage company is introducing Coca-Cola with coffee in the thirsty U.S. market come January, giving drinkers the ability to sip both drinks out of the same can. Now, this is a great opportunity because I think what's going to happen is that all the 7-Elevens, all the on-Qs, pretty much all the gas stations, and all the little grocery stores are going to have these start getting plastered everywhere. And a lot of people that are addicted to coffee, that are extremely addicted to caffeine, might start choosing this over a traditional Dunkin' Donuts or a Starbucks or a McDonald's coffee or really any other traditional coffee. One thing that I could see this being a really good competitor for, you know how I love the company Pepsi? Pepsi has a packaging deal with Starbucks where they package their coffee products and then sell them throughout all their resources and all their connections. Now, Pepsi has had some pretty substantial growth with their Starbucks deal. Now, Pepsi and Starbucks has had some pretty incredible growth from their packaging deals, selling all those bottled Starbucks drinks, but I think this is going to be a direct competitor, and coffee with Coca-Cola is a great idea for Coca-Cola to get a footholding in, and once again, if this takes off, or even if it just has at least a mildest bit of success, I think it will still grow revenues pretty much at no matter what pace. So overall, guys, thank you for watching all the way to the end if you made it all the way to this video. If you want to support me and my channel, like I mentioned, this link is in the description right below. You can get this number up to 45. We now have 44 people signed up, so please get that number to 45. You get $10 just for signing up and depositing $100 to the platform, and this link is in the description to get signed up, as well as my referral link. Also, like I said, if you want to see the 27 stocks for yourself with my target weightings and all different things like that, this link is also in the description. And in the description, there's also things like mentoring calls, credit card referrals, Yada savings accounts. Go ahead and check all that out. But thank you guys so much for watching. I really appreciate all the love and support from you guys and giving me video topic ideas that I can implement into videos and then give you some information about all this stuff that's going on with the stock market. But thank you guys so much, and I'll see you guys next time.